Hey, Anthony.
Hey.
Like you were surprised.
Yeah.
Hey, Tanya, looking so gorgeous over there.
Thank you. Good morning. Good afternoon. How y'all doing today?
Hey,
doing great.
Good, doing absolutely fantastic. Glad to be here another Friday.
Yes, sir. Yes, ma'am.
So for our audience out there, and I know there's a lot of you out there. Hello, Jackie Munjan. Welcome. Welcome. First one I see. Welcome. Hey, guys. Welcome to our show. This is actually your show, Financial Sins, which is a podcast of all things relevant. So we will be here every Friday at 1 p.m. We're going to be on Facebook Live, and guess what? We also going to be on YouTube. So if you want to watch this over and over again after this segment here, you can always go to YouTube and watch it again, and also on Facebook and watch it again. This show, like I said, is your show. And basically, we're here just to give you information to increase your knowledge and a lot of stuff that you may not be familiar with, or if you maybe it's your first time understanding something, we're here to help you with that. So we are here every Friday, 1 p.m. So please join in with us. And I'm gonna let you know about a little bit about me. This is Mad Flo. Yeah, you see Mad Flo up there. I'm not crazy now, okay? Anthony may think I'm crazy. Yeah, there you go. I'm not crazy, but I am making a difference for life and others. So that's what Mad Flo stands for. But basically, all three of us on this podcast are making a difference for life and others. So that's what we do every Friday, and we do it off the screen as well. Mad Flo is my name. I am a Savannaian. been here all my life, although all my siblings decided to leave me here by myself. But I have these two great guys here that could be my sister, my brother. Former police officer, did that for 25 years. And then all of a sudden, I found myself in the financial industry, which I totally enjoy doing because I get an opportunity to teach so many people and educate them on, their understanding their money, their own money. You make it, you work hard for it. You need to understand how to make that money work hard for you. And that's what we do. I work with a company called World Financial Group, but within that company, there is a division called World System Builder. Now, World System Builder has been, been in the company for over 30 years. Now, we're also a company with a company we're owned by Transamerica. Transamerica has been over 100 years, in operation, which means it's a strong company. It's not going anywhere. I'm not going anywhere. I love what I do. Have 3 lovely daughters, 3 fantastic grandkids, an awesome husband. And like I say, I just love what I do. So I want to introduce you to our other host, which is Tanya Scott Pilcher, and also Anthony Murray.
Well, good afternoon, everyone. I am Tanya Scott Pilcher. And what I do is I help people establish a new career in a $1 trillion industry so that they can live their dreams. Through this in-depth professional development training and coaching, and we will get you to reach your full potential. In the past 2 or 3 weeks, we have helped several people make their first steps into financial freedom. And I invite each of you to reach out and hear more, because here in Savannah, we are reaching goals, changing our outcomes and our incomes. And how do we go about doing that? We have a business called Get Skills Insurance Training Academy. And we help people get started in the insurance industry. Those that are already in the insurance industry and need continuing education credits, we're here to help and support them also. I am licensed and insured, an insurance agent for the past 12 to 15 years. I really can't remember how long, but it's been a long time. My husband and also son are in the insurance industry too. I have a wonderful 14-year-old daughter who dares and says, I am not doing it.
Not yet. What is she from the job market?
But she knows all the lingo and everything about insurance and really kind of throws it back at me. And before I turn it over to Anthony, I want to say that, my mom gets on the show just to watch me, but now she has also thinks that you are a great asset and she just loves Anthony too. And I see that my aunties are on, and every time I put on my pearls, I think about my mom and her sisters because they wear pearls on a daily basis. They can be in jeans and a sweatshirt, and you better believe they got on some pearls with them jeans and sweatshirt. So hey to my aunties and my mom, I'm sure she's on somewhere. And you all have a wonderful day. And I would like to turn it over to our co-host, Mr. Anthony Murray.
Wow. Tanya, you're trying to get me to blush. Dark people don't blush easily. But good afternoon, everyone. And I'm so glad to be here. You know what? This show has made a difference in my life. I don't know about everybody else, excuse me, but I know about me. This show has made a difference. My name is Anthony Murray, and I am also part of World System Builder, World System Group. I've been with that organization since, it's like an organization within an organization, but I've been with them since 2018. I've been in and out of the insurance industry since 1981, 82, something like that. My college background was insurance. So I actually have a degree in insurance. And it's more like a business degree, and they threw some insurance courses in there. There was a business degree loaded with law and business management, and we had field trips going to court and all this other good stuff. But hey, it was a great experience, and I don't regret a minute of it. I worked with companies such as Mutual of Omaha, as well as Edward Jones, and now I'm here. I'm with World System Builder, World Financial Group. I am a financial literacy educator. I teach people how money works. And that's what it's really all about. Helping people understand how to better their financial health. And I love it. I just love it. And like Tanya said, this is $1 trillion. That's beginning with a T, like in Tom, $1 trillion industry. I was talking with somebody the other day, and we were just talking about the insurances that were the best insurances in the world. I mean, not insurances, but industries. All right. And I pointed out to them that the top paying industry in the world right now is entertainment. You know, y'all like entertainment. Yes, y'all do. That's why y'all watch TV all the time. All right. If people go to movies, right? Entertainment. Okay. We buy, well, I used to buy cassettes and LPs and stuff. I don't know what they buy today. They don't buy that. They buy something different. All right. So we like listening to the music and all the other stuff, right? So entertainment, people love it. But you know what the second highest paying industry there is in the world? That's the finance industry. That's the industry we are in. And that's what we're going to talk to you a little bit about today, about this industry. And I know it's going to help you. The information that we have is very valuable. I'm going to ask you to do something. Contact your friend, your neighbor. They may be at lunch or whatever. And just ask them, hey, jump in on this show for a minute, 2 minutes, 5, because they get in for a minute. They won't be able to get off. They're gonna love it. All right. So I'm gonna turn it back over into the hands of the most capable Mad Flo. Hey, y'all don't believe her. I don't think she's mad. I really don't. I know she is.
No, you think I'm crazy. I said I'm not crazy. I said I'm not crazy. I am mad. I'm not crazy.
Oh, she's not crazy.
So I am mad every day. I'm mad, but I'm not crazy. Because I'm mad, yeah. Making a difference.
The verdict is still out on that one. Hey, one last thing before I turn it back over to Matt Flo. What about this Juneteenth?
Ain't that awesome?
Huh?
Federal
After
holiday.
all these years, it is finally recognized. It's going to be recognized as a federal
holiday.
Federal.
I even called my insurance company today. They're closed down. They're closed. They're closed. My insurance company, I had to file a claim today. They're closed because they're recognizing Juneteenth as a holiday starting today.
Wow.
Ain't that something?
Well, this is awesome. Listen, makes me want to play that song by James Brown.
What's that?
What we need. What? All right, let me stop. Okay. But anyway, I'm dating myself a little bit.
That's right, Auntie. You said, yep, thank you, God. It's about time. It is
about time.
It is about time.
It is time.
It is. There is one state, I don't remember, they were on TV, and they are actually paying reparations. Just one state in the United States actually paying reparations to African Americans. I don't remember, there were some requirements involved, but I was like, whoa.
Wow.
Whoa. I don't remember if it was a state or the city. I believe it was a state. And because the governor of that state was on television. And I was like, man, that's amazing.
And there's 14 Republicans that voted against it.
Against reparations?
No, voted against the Juneteenth, federal holiday, make it a holiday.
Is that right?
Mm-hmm. 14
Well,
against it.
Well, we still got it anyway, didn't we?
Yep.
Oh, we got it. We had more than we needed. Thank God. But guess what? I got some other awesome news.
What's that?
Totally awesome. Now, if y'all remember me telling you way back when that I was a victim of bankruptcy, I mean, things happened and I had to file for bankruptcy. That was over 5 years ago. And I got my discharge about 8 months ago. And usually before you can get a credit card or any kind of, credit, trying to build your credit up, it's hard to get. People won't mess with you until a year or 2 years down the line. But I was able to get a credit card. I was able to get a company Rooms to Go card. I got an actual credit card now and a Rooms to Go card. And I just applied for a loan, a line of credit. So I was able to get a line of credit. And to, the fact that this is, I'm in my infancy getting out of bankruptcy and being able to get these things in place. So what I'm doing now, building my credit up again by basically utilizing those credit cards I have, but I just make sure I paid off for the first 6 months. And then after 6 months, I pay the whole thing off because you don't have to continue to pay it, to get credit. 6 months is good enough for it. And then it's reported to the bureaus. And so that's awesome for me. Just infancy, getting out of bankruptcy and be able to get that. I'm about to get my kitchen redone. Wow. And about to get my kitchen redone. I'm going to pay for that cash, but I am going to file a claim with the insurance company. And what we're covering today is going to help you. It's going to help me because Tanya understands what we're covering today, which is deductibles, co-insurance, and what's the other thing?
Co-payments and premiums.
So with me filing for insurance to see if I can get some coverage on my my kitchen repairs, now I get to understand my deductible, my copay, or whatever that stuff is I have to pay before the company would pay me the full amount. So you're in for a great treat today because that's what we're going to be covering, get you to understand more about the deductibles that you pay, whether it's for health insurance, car insurance, homeowners insurance, any kind of claims you have to do. If you have to do a copay, a deductible, or a co-insurance, you'll understand that more because that's what we're going to be teaching you guys today. And I'm going to be learning too. I don't understand. Tell you the truth, I'll be honest with you. I really never truly understood the deductibles. I know I just pay and, nothing's really coming out of my pocket because my deductible, I think when I go pay the company, when I go pay my doctor, it's like $15 each time I go.
Yeah.
Is that a copay?
That's a copay.
Okay, that's a copay. So Tanya is our little expert on this part here. I'll be learning from her as you guys are learning from Tanya today. So Tanya, let's go ahead and start it off. Go ahead. I'm just excited to share that about my bankruptcy and being able to, get
congratulations. That's the first thing you say is congratulations and, moving yourself back into financial freedom.
That's it.
Being able to get the credit that you need to do some different things. That's awesome. So congratulations. I really want to know, how did you get into it so quickly that, why? Because
what happened was, okay, I did not, I didn't make sure I didn't get any hard, hard hits on my credit. Mm-hmm. Every time I wanted to find out about something, I always did a soft hit. So it does not apply to my credit report. But the first thing I did, because I was trying to find a credit card that I could utilize and a loan that I could utilize, the first place they gave me a credit, I was totally shocked, was Rooms to Go. They gave me $4,200. So of course I used up, I think about 3,000 of that, but it's paid off. Right. And then I needed to try to build up a loan. I went to the banks. The bank is not going to touch me until a year or 2 years now. They're not going to loan me any money, not even $100. So there's something called self.com. So I went to Self, and actually what I did was I applied for a loan. It was a small loan, no more than about $800. But I do not actually get the money. what they do is they set up an account where I pay them $35 a month for 2 years. And then after 2 years, they deduct their interest that they earn, and I'll get back. I started with $850, so I get back maybe $720. So they get their money that way. But I know the key here. I don't have to do 2 years. I can do 6 months. So I just did this self loan for 6 months. I closed that out last month. And then they sent me the balance of what I put in, which they gave me, I think it was like $175. So that's when I started with self, just getting a small loan, because that's all you need. And guys, if they say you have to do 2 years, don't do 2 years. All you have to do is do 6 months and then pay off the balance that's left, because 6 months is all you really need to record that you're paying on time. Right. That's all you need is 6 months. You don't have to continue paying that. And then from there, my credit score is up to 700. Being in bankruptcy, my credit score is up to the highest one I've seen so far was 700, and I think it's 740 right now with one, and then 720 with another one. And so those credit scores help, even though it shows bankruptcy on my credit report. The companies are looking at what I have been doing since I was discharged. And what I've been doing was building my credit up little bit by little bit. Because see, I need to get the big expenses, because there's work I need to get done to my home. So I'm looking to build my credit up where I can get that $50,000 business loan, $100,000 business loan. So I'm looking to build it up within the next 6 months to a year to get into the big leagues, because I still have big visions. I want to start flipping houses like I used to do. And instead of flipping them, instead of renting them out, as I purchase them and rent them out, I am going to start flipping them, because I'm too old to be trying to keep up with all this here rental stuff and all that, but I'm start flipping. But I need big money for that. So little by little, I'm getting there. And I think within 6 months to a year, I'll be where I want to be to get that big loan and start my business up again with that. But that's all.
Isn't that great, Anthony? She did a good job, didn't she?
I'm telling you, yes, she did. Flo, I'm proud of you.
Well, thank you.
Yeah, I'm proud of you.
And again, that was self.com, right?
It's self, SELF. I can't remember if it's .com or INC, but just Google self loans.
Okay.
Google self loan, and once you Google that, that is a credit builder. It's a credit builder, because no one else is going to give you a loan, but they will give you a loan. No matter what state what situation you're in, you're going to be guaranteed you will get a loan from them.
Okay. Hey, Tanya.
Yes, sir.
What's your mom's name?
Shirley Scott.
Shirley Scott. Hi, Miss Shirley. Love you. Love you more.
I haven't seen her say anything yet. I did text her and say, "Are you on?" So this isn't Avon Day, so she's usually here.
James. James,
hey, there's another thing you could do too. You could always go to the bank and open up a what is it called? A collateral.
A collateral loan.
Mm-hmm. Yeah. And you can start with a small amount. You could open up an account with them for like $500. Most banks, that's the minimum for this type of loan. And what it is, you're actually borrowing your own money.
Yeah. That's
all right. And then you pay it back. All right. And so you do that for like 6 months, 5 or 6 months, and boom, you're on the record. But you have to be on time with it. And
that's the key.
And that'll help you out tremendously.
Don't miss a payment. So I make sure I don't miss a payment. I do automatic.
Automatic bank draft.
Yeah, automatic bank draft. But I also do an extra payment the day after. So I have that set up automatically with my bill pay. So once the auto draft comes out of whatever that is, $36, then I'm paying an additional $100 2 or 3 days after, so I can pay it off early.
Oh, yeah.
Yeah. So both of them are automatic.
Awesome.
Auto draft. The auto draft with the company, and then I do bill pay, and it's automatic. That way I don't have to worry about it. Right. And I know it's going through just like I needed to go through.
That's awesome. Congrats. I mean, again, that is a tough thing to get out of and get done. So congratulations on that. All right. So I think one of those other topics that we're going to talk about today is co-payments, co-insurances. of deductibles and premiums. And what does that really mean to our customers and to us is that is the 4 main ways that money comes out of our pocket. So all of us pretty much understand a premium, right? When we get some kind of insurance plan, we all pay a premium. So even if we start at our jobs and we get the health insurance from our job, we know that we have to pay the premium. It comes out of our checks. Now we have that actual policy and we begin to go to the doctor. Well, when we went to the doctor, it says on our little card that our co-payments are $35. And so we continue to go to the primary care. We continue to go to our specialist. And it doesn't really register because we're just paying these co-pays and co-pays. But then when we go to the hospital, something may happen at that time because there's something called a deductible. So before we even get there, let's go back a little bit. We want to talk about, or I want to talk about with you, when you get ready to purchase something, to look at the deductible, because the deductible means that you're going to have to pay this amount before you can reach or get the benefits of your insurance. So sometimes it has to deal with before you can pay the copay at this small amount or the specialist copay. So let's look at affordable health care. All right. Now, you all know, Mom says she loves you.
Love you back. Love you back.
So when we're when we're looking at the affordable health care, and everybody should know that the president extended affordable health care enrollments until August 15th of 2020, something that stopped ever since January 2021, all the way to August 15th, 2021. So if you do not have any insurance, you should enroll in affordable health care. The other thing is that they reduced the amounts that you have to qualify for to receive the credit. Okay, so where you thought you had to have a higher salary in order to receive it, because in Georgia we did not expand Medicaid, so people that have a certain income, they must have income in order to get it. But we have these wonderful plans out here, and a lot of us want to get into the plan that's zero because it costs zero, but it has a deductible sometimes of $8,000. And so I've had people say, hey, it doesn't matter because all I need is to be able to go to my primary care physician and just get my standard things. And all of those are at no cost because when affordable health care came in, it made all of your preventive zero cost, right? Y'all remember that? And it also said that they're not looking at any of your pre-conditions, anything that you had before, right? So that's all great. Now we're looking at the carriers that have the plans out here. So they have these deductibles that are humongous. So as long as I'm going to the doctor just for a checkup or my annual physical, I don't have to worry about that deductible. But now we got COVID in the air, right? So if I go to the doctor because I think I have COVID or I got this cold going on, I'm going for a sick visit, I have to be prepared to pay the provider all of that cost because I got an $8,000 deductible that I must meet. And then they call you up and say, I didn't know. And like, well, this $8,000 deductible has to be met before you can pay that doctor the $5 or the $15 because maybe you're going to a specialist. And that's what people don't understand. So when they bought the plan for zero cost, there was a deductible in there for $8,000. Now, if they would have just moved on down the line to another plan, the plan may have a smaller deductible of maybe $200 or zero, but their premium would be
larger.
Yeah. So let's say the premium for, affordable health care, you might be about $30, And so when you have a $30 premium, you may be able to get a deductible at zero cost. Okay. And then that means that now I can go to my primary care and also to my my specialist without having to meet a deductible. Okay. Because when you have to meet that deductible, that is a huge amount. So that just means that you're going to pay everything until you have spent out of your pocket $8,000. Okay. And of course, I'm using a large one, but some of them are huge because affordable health care sets for us the maximum out of pocket. Are you all familiar with maximum out of pockets?
Yeah, I've heard of it, but I don't clearly understand it myself.
I'm not that familiar with it. So explain it to us.
All right. So your maximum out of pocket, when you get a health insurance plan and even a Medicare plan, any of your health insurance plans, they all have to identify what your maximum out of pocket is going to be. Your maximum out of pocket may be something as large, let's say again, $10,000. Okay. So as you're going to your primary care, as you're going to your specialist, as you're getting your checkups, what else are you spending money on when you go to the doctor? Your tests, your X-rays, all of those things, your MRIs, they are all at a certain cost that you're paying. And so it's tallying up those amounts. And as it tallies up, it goes towards the maximum out of pocket that you're supposed to pay. So now let's take having a surgery. Okay. So you have to go in and have a knee replacement. A knee replacement may cost $20,000. Okay. Your maximum out of pocket is $10,000. So you would be responsible for the $10,000, and then that other 10, you've already reached your maximum out of pocket. Okay, so you're not responsible. The insurance company pays 100%. So it also keeps you from going into bankruptcy because now you don't have an extra medical bill to worry about. That other $10,000 of that bill has already been taken care of because your plan has a maximum amount that you will spend each year. Understand? Mm-hmm. So even on your job, your plan has a maximum out of pocket. And once you reach that maximum out of pocket, then your plan either pays, on some commercial plans still say that they'll pay 80%. But those that are run by the government still, so your affordable health care and your Medicare, they will pay. That's 100% now that the insurance companies will pay after you have reached your maximum out of pocket. It's different from a deductible because the deductible says, I have to spend this money first. Your maximum out of pocket just says, hey, whenever you reach it, then we'll pay 100%. So if it takes you all year, then okay, it took you all year to reach it. Then, you roll into the next year. So it's the maximum that you will have to spend in order for them to pay 100%.
And that's in 12 months time.
That's in a 12-month time, and it changes every year.
So if you get out of pocket in the 12th month and the 15th day, December 15th, you got 16 days left that you can.
If something else happened and you went back in because you had surgery at the beginning of the month and you got to go back in for something else, then that's paying at 100%.
Okay. So would in network and out network, would the deductibles be different?
No.
And pay be different? A co-insurance be different or no?
Well, okay. And that's just up to the insurance company and when you purchased your plan on whether to be different in and out of network. So some plans will have a different cost if you out of network. You're always going to pay a higher cost if you go out of network. So,
okay. And these plans will be changed annually during open enrollment, correct?
say that again.
Now, these plans will be changed annually during open enrollment, correct?
Yes, they are changed annually during open enrollment. And most of the plans that are there are also HMO plans. Jackie said most of the time, most of the time it's required at the beginning of the new year. That is absolutely right. So every single year you get something different. So whether it's Medicare or whether it's affordable health care, your plans can change. You're only in and locked in for 1 year. And then you can get something else. You can change to another company, or your plan may have changed something within it. But I'm just trying to make you aware of when you are purchasing that plan, what you are fully getting. On your job, they're only going to give you a couple of choices. Okay. But when you're making choices and purchasing affordable health care from the marketplace or from an insurance agent, then what you're looking at is, again, what is that deductible and what's the maximum out of pocket? Because you don't want to pay a whole lot, but you need the health care. And sometimes, you think something isn't going to happen. I had a friend who is 58 years old, and then she wants to tell me that, I'm only going to the doctor just because of, I'm just going because I just need a checkup. I'm not going for anything else. I'm pretty healthy. And then comes to find out she got a thyroid issue. Okay.
Oh, Lord.
So now she's got this plan that she only wanted to pay $0 for and has to go and see a specialist, have some tests run, and she's got to reach that, big deductible amount right now. And wow. She's hating it because she's just, whatever the doctor says is the cost. And when you go to the doctor's office, there is no chart that says, the test is $20. My hitting you on the head is $20. My checking your knee and checking your heart is this. You have no idea what that cost is. So you are bound to whatever they give you as the bill. And so she's finding out how expensive it is and very disappointed, because she's not in a Medicare plan where she's doing 80-20. She is having to pay the entire amount through, her plan. But, when you're over 50 years old, you got to think that something is going to happen. So at least, kind of look at it.
It starts deteriorating.
Yeah.
Right.
Yeah. And so that's kind of how healthcare looks at everything. And no matter, again, whether or not it is a Medicare plan or affordable health care, you're going to have a premium, right? You're going to have a copay, and those are set. It's usually on your card, what you're going to pay. You're going to have co-insurance. Now, when we talk about co-insurance, that's a percentage. You got 80-20. 80% is usually covered by the health plan, and 20% is covered by you. 20, that got Makita in the back talking about that 20% could be any cost. That is absolutely right. You don't know what that is until you get the bill. So your 20% can 20% of what? Because in Medicare, it's usually 80% of the Medicare allowed amount. So let's say it's you got $1,000 bill, and then Medicare says that they're going to pay 80% of the allowed amount. Well, you don't have a chart to know what that allowed amount is, right? Mm-hmm. So you're going to just calculate what's my 20% of, that's $200, right? So that when you're at least prepared in your mind mentally of a $200 bill is coming to you. And hopefully, after they do I always tell my clients, never pay the bill as soon as you walk out the office, because let Medicare do its thing. And then when they send you the bill later on, you're more prepared, because that bill may not be the 200, because once Medicare has put in its allowed amount, it may be a whole lot less. So, but you never know what that 20% is. It's not going to be there.
Wow.
You know what I've been doing, Tanya? I'm gonna tell you, I just have perfect teeth. I'm 62, have all of my teeth, and the only thing I go to the dentist
rub it in, won't you?
since I was 19 was I just go get my teeth cleaned every 6 months. That's all I've been doing since I was 19. Wow. And when I became a police officer, of course, we can get the health insurance included with the dental. So what I did was I would just pay the $19 just for the basics, just to get my teeth clean every 6 months. Then as I got older, I had some issues that need to be taken care of, which was going to cost me maybe about $2,000 or $3,000. So what I did, I just waited until the new year, and then I just increased my my coverage to the major, I guess. Instead of paying $19, I paid $52. Go ahead and have major work done. And then I pay less. And then after I get all my work done, then next year I go right back down to basics. So right now I'm back getting my teeth clean. And because last year I had to have something that was going to cost my $2,000 root canal, something. But it's about $2,000. I said, I ain't going to pay that kind of money. And I know what I had to pay out. So I waited until this year, changed my premium to major. And then this year I got the work done. And then I just go back to
the basics later.
Yeah. And pay less.
Wow. That's amazing.
Yeah. That's a good tip. Another question I had was, and I know you're not a tax assessor or anything, but the money that we pay co-insurance, co-insurance, and deductible, can the people claim that as a exemption during tax time because it being medical, or no? Do you know? You know how you can claim a certain amount of medical expenses, and I wonder if the co-insurance or the deductibles and all that would be included in that as far as tax deductible, because you can.
If you're self-employed, some of that is, but other than that, no.
So those are not included as a medical. So if I have to have like major surgery, just say it's $10,000, but they would not include the copay and the other expenses. They would only include just what it took to repair my body and give them people that money and doctors that money. Okay, got it.
And you know what? You brought this up. You said if you're not self-employed, all right, which is a really good reason to get into this industry. Really good. Listen, when I got my taxes done, that lady told us how much money we was getting back. And I was like, oh man, I haven't gotten money back in who knows when. All right. But she took everything into consideration, my mileage, and she said, which one do you want to use, your mileage or your gas? I said, which one's better at this time? She said, your mileage. I said, use my mileage. And so because I was traveling all over the place. Now that this COVID thing is up, guess what I'm going to be doing again?
Travel.
Yeah, traveling. So I asked her, I said, well, what if I lease a car? She said, it's a business expense. I said, ooh. I said, wow. So, there's an advantage of being in this industry and doing what I'm doing, what Tanya's doing, what Mad Flow is doing, So there's some tax benefits to it. And look, and with our company, you don't even have to come on full time. You could be part-time. I did it. I came on part-time, and then just transition if you want to. You don't have to. I have a colleague. I forget. He's in Delaware, I think, or in that area. All right. He works for a bank, a major bank. I'm not going to. Well, I can mention the bank. Name of the bank's Wells Fargo. Who works for them full time, but he does this part time. He has a security license, and they told him, because he had to go through the bank and let them know what he was going to do. They told him as long as he does not sell any product that competes. So we may have the same companies that we deal with, but he cannot sell from this company with that company. All right.
Right.
So whatever the product is, if it's the same company, because we're both brokerage firms, they cannot clash. They cannot clash. They can't be the same. So he's doing very well. So you can make good money. You could get your piece of that $1 trillion. Hey, Tanya, tell us some more about this. Which area were you getting ready to cover?
What do you mean for what we were talking about with our deductibles and stuff?
Deductibles, co-pays, and all that stuff.
Well, I was going to talk about one more thing, and it was an issue and why I got my P&C license.
Okay.
In that October that we had the big storm and a lot of homes in our neighborhoods got damaged, people were paying out to get roofs and damage to their homes, huge amounts, $20,000, $40,000. I think 40 was the maximum that I'd heard. And they, were asking me questions and I really could not answer. And I know that last week we had a guest speaker that talked some about homeowners insurance and whatnot. But when we purchase our homeowners insurance, I want to remind you, because purchasing a home is huge. It's a big deal. And we get so excited about our purchase. And when we go to the mortgage company, we're told that we can spend up to a certain amount. And everybody's working to get your home into that amount, your taxes, and your insurance. And so what happens on our end is that we get information from the mortgage company to put a person in a homeowner's plan. And they'll tell us specifically, it doesn't need to be, their monthly premium doesn't need to be over, let's say, $150. Okay, that's all they can do. So in order for us to do that sometimes is that once the carrier gives us a premium for it, for the home, the only way that we can reduce that premium after we've done all the little discounts that you can give someone is to increase the deductible. So when I increase the deductible from $1,000 up to 5%, that's 5% of the face amount for that plan. When they have a catastrophic happening to happen to their home, they got to pay 5% of that policy. So let's say that their home is a $300,000 home, and their insurance is to cover the home if the home was burned down, right. Okay, to replace the home. So their policy is for the amount of $3,000. Now but the mortgage company says they can't spend more than $150 to fit into this window. So I gave them a premium of that $149, but that deductible amount is at 5%. So now when October comes and the roof blows off their house and a tree falls in it, and now they got to pay this deductible of 5% of $300,000.
How much is that?
Okay.
That's a lot of money.
10% is what? $30,000.
$30,000.
And half of that would be $15,000.
15, yeah.
So they would pay $15,000 deductible before they can get a roof put on their home.
And what if the roof only costs $10,000?
Well, then they just paid the whole roof.
They just paid for it.
They paid for it themselves. They self-insured.
Wow.
Okay. So, and if you get a chance to talk to the client, you mention it and I say it. And I'm like, look, baby, as soon as you get into this home, you need to come back and see me so that we can reduce this. I tell you, not 1% of the people will do that. They stay in it because when do you change your homeowner's insurance?
Right.
right? You never even think about it. But I'm telling you, if you look at it every 3 to 5, 6 years, because it's going up, and especially if you did a claim, it's going up. But you're not noticing it because it's just a little bit that changes in your premiums for your mortgage. So your mortgage changed a little. You think maybe it's your taxes, and it's not. But that's what's happening to you when you get into your policies. And you have to look at those types of things and not get all excited that, hey, my mortgage is going to be, $1,200 right where they said for my wonderful home. Somebody's working miracles to make those things happen so that you can go to the closing. But you do not need to go into that closing and look at that policy and make sure that you're either paying $1,000 or $2,000 or 1 or 2% of that amount. Because it gets expensive when something happens, and you always think it's not going to happen to me.
Mm-hmm.
So, God knows what may happen. And we've had these unexpected rainstorms in our city. We've had hurricanes. We've had of course we have hurricanes. I was going to say tornadoes. So all of these things can happen in our homes or in our neighborhoods. And this is part of when you get ready to purchase something that you look at your deductibles. Please, please, please. And you need to look at it now. You could be sitting in your home right now and haven't looked at your homeowner's policy in forever. Because when it renews, you just throw it over in the corner because it's coming out of your mortgage. You didn't look at it.
Guilty as charged.
Guilty as charged. So I need to be more diligent and look at that paperwork and get a review probably. So
yeah, I know I had to do that. I did that a couple of times. I reviewed my homeowner coverage and went over different things. And I said, well, why do I have this? Why do I have that? And I tell you what, I forget what year it was. We had a bad hurricane in Effingham County. And we had a hailstorm, which messed up my roof. Now, I ended up not paying anything out of pocket. All right. But there was a couple of things I did. All right. And the first thing I did, I shopped.
Yes.
I shopped for a good repairman for my roof. And so much for that. That worked out a little bit. But the second thing that I did was when I found out how much I was going to have to come out of pocket, how much my deductible was, I negotiated the price with the contractor. And so when they got the check, or the insurance company actually sent the check to me, when I got the check, I was able to pay him off and have a little cash for myself. So listen, do your due diligence. Do your due diligence. They say the best way to hide anything in plain sight is to put it in writing. The best place to hide anything in plain sight is to put it in a book or put it in writing. Why?
So wait. You forgot the adjective from Black people.
Hey, look, I'm finding out that it's for everybody. There's people in general just don't like to read. People like to skim through the material. I read a little bit of this, a little bit of that. No, you got to read the whole thing, man. You got to get down in there so you know what questions to ask, what your limitations are, what your benefits are. You need to know the detail. Absolutely. We are not into detail. The people of color don't like detail. A lot of people of color. I can't say that for everybody, because if it was all people of color, then we would not have any Black attorneys or judges or doctors. So there are people that of color that get into detail. We just need all of us to get into the detail.
Absolutely. So I think that is going to draw an end to our show today. I think we have covered pretty much those deductibles, co-insurance, co-payments. And I want to bring up, if, like Anthony was saying, if you want to take a look at insurance, we have a class in Atlanta scheduled for July 10th and 11th, 17th and 18th. Coming up very soon in Atlanta at the Crane Center. If you want information, you can just give me a call. My number is running across the bottom. The class is $240. It's 4 weekends that you can give up and change your life.
Hey, listen, let me also mention that Juneteenth is going to be celebrated this weekend. All right. There's celebrations all over the place. Yes. My wife and I are going to Hilton Head. They have something good going on. I think the largest celebration in Georgia is in Atlanta. I don't know if they're going to execute that this year to where they have the celebration for Juneteenth this year. You know, Georgia has lifted the requirement for a mask. I don't think that mask done anything anyway, but it was good marketing too. Anyway, get back to this. You know, I mean, really think about it. You know, airborne germs and a mask going to stop it.
Well, I believe in that mask. You can have
your the mask.
That mask. At least it was some of it.
Keep wearing it. Keep wearing it.
I will.
No, it might work. I don't know. I did wear a mask sometime, but we need to really be better stewards of our money.
Absolutely.
You know, we need to be better stewards of our money. You know, even with deductibles and the things that Tanya was covering, man, that's vital. How many people really talk about that? When's the last time I said this when we were talking about life insurance? When's the last time you had a policy checkup? Let me say it like that. When's the last time you go to the doctor, get your annual checkup? When's the last time you had a policy checkup? You need to get your homeowner's insurance looked at, either by the company you're with or by somebody else. You need to get your life insurance policy looked at. You know, I was dealing with somebody who husband passed and he had a $5,000 life insurance policy. They had to come up with the rest, and they didn't cremate him. This was burial. So they had to come up, I forget how many thousands of dollars. And you know how they got the money? They had to borrow the money.
Oh.
No, it wasn't the other word. Okay. It wasn't the other word. It wasn't pass the hat. They tried to pass the hat, but it didn't work. So they had to go to the bank and borrow the money. So now that means they went into debt. They went into debt. Hey, you know what? I believe get out of debt as much as possible. Hey, we only have a couple of minutes left. Let's wrap it up. Closing remarks from Flo and Tanya.
Hey guys, you know what? I learned a lot. Thank you, Tanya. Because
wealth of information.
Wealth of information. I totally understand now how those three things work. So thank you very much for your knowledge and passing the knowledge on. And you know, you guys out there, the information is here. You just tune in with us every Friday, 1 o'clock, and we're going to have something jamming that you're going to love every Friday. Again, thank you, Tanya.
You are quite welcome. I want to thank everyone for showing up, especially my family and friends and my Pearl Mungin ladies for coming on and supporting me.
Yeah. Yeah.
And, thank you, James. Yes, it's going to be a life insurance class that we're going to be doing. We'll see everybody next Friday. Anthony, close it out.
Hey, well, listen, guys, I want you to do something for us. When you get on Facebook, like us on Facebook, like the ATR, All Things Relevant Media. Like us on Facebook. You need to really support this. Did you know that the engineer to our program, I wonder if he could say hi real quick, is running for mayor of Port Wentworth, Georgia? All right, his name is Julius Hall. Julius, at least say hi. Show up. Pop in. Pop out. Pop up. Oh, there you go.
Yes. Hello, everybody. Hello, Port Wentworth. Hello, Chatham County.
Just wanted to say, you guys notice he's a person of color. So now look at that. Person of color in Savannah, person of color in Port Wentworth. Now we need a person of color in Effingham County. We did have a black mayor in Guyton, but he decided not to run again. So listen, Port Wentworth, support Mr. Hall.
Yeah, there's only the only city that ever have a black mayor in Chatham County is Savannah. There's 9 cities in Savannah, 9 cities in Savannah, according to how you count.
Yeah.
Well, in Chatham.
I mean, in Chatham County, 8 or 9 cities, according to how you count. In Chatham County, and Savannah's the only city that ever have a black mayor. So we're going to make history. We're going to change things. It's not about black and white. It's about one Port Wentworth, and that's what we're going to make it, one Port Wentworth. If you look at my name, you'll see in my first name, Julius, you see the U.S. That's us. If you look at my last name, Hall, the all, us all.
All right. That's wonderful.
All right.
That's all right. I got you.
Wow.
Look at that. Look at, all right. Well, hey,
Us all.
How you say it in church, Pastor? Look at God.
look
Yes,
at God.
Look at God.
And this is awesome. Some great information today. I hope you guys got something out of it. I know you did. You know, this show is for you. It's for you. You know, for me too, because I get a lot out of it. And we want to thank Julius for allowing us to be here. And once again, like us on Facebook. Join us next week. We have so much more to give to you. And pass it on. Let your friends know. Bring a friend with you. Make them watch it. Tell them you're going to have lunch together. Threaten them. Threaten them. Say you're not coming. You're not getting anything to eat. You know, make it happen. We love you. We'll see you next time.
All right. You guys have a great day. See you, Tanya. See you, Anthony.
Yeah.
We'll see you later.
Again, Tanya. I know now. I understand.
Great.